Business, wealth, and strategy, where smart entrepreneurs build lasting wealth. Hello, and welcome to today's episode of Business and Wealth Strategy, where smart entrepreneurs build lasting wealth. I'm your host, Karen Newton, and today we're diving into a topic that often gets overlooked, but plays a crucial role in long-term wealth building. ISAs, or individual savings accounts. And for listeners who are outside the UK, you will have your own versions. Well, some of you will have your own versions of an ISA or an individual savings account. So whether you're just starting your wealth journey or you've already well on your way understanding how to use ISA strategically could make a difference to your future financials. So let's get started. What's an ISA? Let's start with the basics. An ISA, or individual savings account, is a type of savings or investment account available to residents of the UK that offers tax-free growth on your money. That means the interest you earn, the dividends you receive, or the capital gains you make from your investments within an ISA are completely tax-free. In simple terms, it's a government-approved way to protect your money from taxes and grow your wealth more efficiently. Each year, there is a set amount that you can contribute to an ISA, and this is called your ISA allowance. This allowance can change slightly from year to year, depending on government budgets, but the important thing is once you use that allowance, it's locked in. You don't use it in a given tax year, you lose it. You can't carry it over. That's why savvy investors make sure to maximize their ISA contributions every year. And just to quickly clarify, every country has a way for you to invest that the government encourages. So in the UK, they are ISA contributions. Just check what your country offers, because there will be something tucked away somewhere. So let's look at the different types of ISAs. Now, there are several types of ISAs to choose from, depending on your financial goals. Cash ISA. This works like a regular savings account, but your interest is tax-free. It's good for emergency funds or low-risk savings. Stocks and shares ISA allows you to invest in a wide range of investment, like shares, bonds, or funds with tax-free returns. Ideal if you're looking to grow your wealth over the long term. Innovative Finance ISA lets you invest in peer-to-peer lending platforms, higher risk, but potentially higher returns. Lifetime ISA, designed for saving for a first home or retirement. The government even adds a 25% bonus to what you save, but there are restrictions on when you can withdraw without penalties. Junior ISA, for saving on behalf of children under 18. Great for wealth building for the next generation. Each type serves a different purpose. The key is choosing the one that aligns with your strategy, or even combining different types if it suits your goals. Why ISAs are important for building wealth. Now, you might think, okay, it's tax-free, that's nice, but does it really make a big difference? And the answer is absolutely yes. Here's why. Compound growth. When your money grows tax-free, you keep more of the returns. Over 10, 20, or 30 years, this can add up to thousands, even hundreds of thousands more compared to taxable accounts. Flexibility. You can withdraw money from most ISAs without losing tax benefits, though some, like the lifetime ISAs, have conditions. It gives you access if you need it. Financial security. ISAs create a financial buffer, a safety net that grows alongside your income, your business profits, or your other investments. Legacy planning. Junior ISAs allow you to help the next generation start life with financial security already in place. When you integrate ISAs into your broader strategy, they're not just nice to have, they're an essential building block of sustainable wealth. So let's look at some of the misunderstandings about ISAs. So there are a few common misconceptions. I'm going to call them myths. Myth 1, ISAs are only for the rich. That's not true. ISAs are for everyone, and you can start very small, even with just £10 a month. It builds momentum over time. Myth 2, you can only have one ISA. You can open and hold multiple ISAs, but you can only contribute to one of each type per year. Myth 3, it's too complicated. Actually, ISAs are one of the simplest financial tools available. The hardest part is choosing the right type. After that, it's just a case of being consistent. Myth 4, they don't really save that much tax. Over time, tax-free growth can far outperform a similar taxable account, especially when you factor in compound interest. How to integrate ISAs into your wealth strategy. So here's how smart entrepreneurs and investors are using ISAs as part of their overall strategy. Use your allowance every year. Even if you can't fill it, something is better than nothing. Remember, unused allowance doesn't roll over. Next, mix cash ISAs and stocks and shares ISAs. Balance safety and growth. Keep emergency funds in cash. Invest long-term funds in stocks and shares. Think of it as part of your business strategy. If you're self-employed or run a business, building personal wealth outside of the company is essential. An ISA provides a tax-efficient way to do that. Teach the next generation. Opening a junior ISA for your children or your grandchildren teaches them financial responsibility early on. ISAs aren't a standalone plan. They're a core tool that supports your bigger picture, whether that's building financial freedom, investing, or even if you want early retirement. So today, think about how you're using your ISA allowance. Are you maximizing it? Have you thought about using different types of ISAs to fit different goals? Are you using it as passive part of your business and wealth strategy? If not, well, it's never too late to start. A small action today, setting up that direct debit, transferring a little extra into your ISA, or reviewing your investments can lead to huge results over time. Remember, it's not about how much you start with. It's about starting. Thank you for joining me today. If you found this episode helpful, don't forget to subscribe, leave a review, and share it with anyone who could benefit from building smarter wealth strategies. Until next time, keep building, keep investing, and keep believing